The $20,000 secret. Your ticket to retirement and financial independence. Hey there, my fellow dreamers and doers. Imagine this. You've diligently saved up $20,000. That's a fantastic achievement. But here's the burning question. What's your plan for it? Most people leave it sitting in a low-interest savings account, slowly eroding its buying power. Or worse, they blow it on something that brings fleeting joy, but no lasting financial security. But what if that very same $20,000 could become a powerful engine that one day, incredibly, replaces your entire full-time job? What if it could grow into a substantial investment portfolio worth nearly $1 million, paying you over $70,000 in annual passive income? I will be answering those questions with a clear step-by-step guide that you can follow and achieve those same numbers. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. In this video, I'm going to pull back the curtain and show you exactly how a one-time investment of $20,000 in a specific exchange-traded fund ETF, the Schwab US Dividend Equity ETF, or SCHD, can achieve just that. We'll dive deep into why SCHD is a top choice for investors seeking financial freedom, and explain how a smart dividend reinvestment strategy can transform your starting capital into a wealth accumulation powerhouse. We'll even address a significant event in SCHD's recent history that made it even more accessible. By the end, you'll see the clear path to having your investments work harder for you than you work for a paycheck. Part 1. Unlocking the power of SCHD, your dividend workhorse. So, what exactly is SCHD, and why is it such a popular pick for investors looking for passive income? Think of SCHD as a meticulously curated basket of stocks, specifically chosen from reliable, well-established US companies that consistently pay and grow their dividends. These aren't speculative startups. These are the titans of industry, companies with a long history of sharing their profits with shareholders. The real beauty of SCHD for you, the individual investor, is that you get to share in the profits these giants generate, simply by owning a piece of this diversified fund. It's like being a silent partner in 100 of America's most financially robust businesses, all wrapped up in one easy-to-manage investment. This focus on high-quality companies providing consistent dividends is foundational to building long-term wealth. Part 2. How SCHD picks its champions. SCHD isn't just throwing darts at a board. It follows a clear, strategic process to select the companies that make it into its portfolio. It's rigorous, disciplined, and designed for stability and dividend growth. To even be considered, companies must have a proven track record of paying consistent dividends for at least 10 consecutive years. That's a decade of reliability. A market capitalization of at least $500 million. We're talking about established players, not small ventures. They must be easily tradable, ensuring liquidity for you, the investor. Once a company meets these foundational criteria, SCHD dives deeper. It scrutinizes factors like dividend yield and the rate of dividend growth, along with other crucial financial health indicators, such as cash flow, debt levels, and return on equity. From there, it narrows down the field to the top 50% of stocks based on these factors. Finally, the fund selects the crème de la crème, the top 100 stocks. To maintain diversification and prevent over-reliance on any single company. No single stock takes up more than 4 to 5% of the total portfolio, and no single sector exceeds 25%. Plus, SCHD rebalances its holdings every quarter. This constant fine-tuning ensures that SCHD remains focused on high-quality companies with solid financial foundations and a proven history of rewarding their shareholders through consistent and growing dividends. This meticulous selection process is a cornerstone of its wealth management success. Part 3. Inside SCHD's treasure chest, the holdings. So, what are the actual companies you'd be owning a piece of with SCHD? The fund's portfolio includes top-tier companies from various sectors, ensuring diversification while maintaining stability and strong passive income potential. You'll find familiar giants like AbbVie, Coca-Cola, Amgen, Cisco Systems, Pfizer, Texas Instruments, Verizon Communications, Chevron, Bristol-Myers Squibb, PepsiCo. These are not just big names. These are companies that have consistently demonstrated robust performance over time. For example, in the technology sector, SCHD holds major players like Cisco, which boast massive market capitalizations and strong cash flows that underpin their ability to pay dividends year after year. The healthcare sector is another significant presence, with powerhouses like Pfizer, known not only for its dividend reliability, but also for its continuous innovation and stability in a vital industry. In total, SCHD targets companies that are part of the Dow Jones U.S. Dividend 100 Index. These are well-established entities that have proven their ability to weather market fluctuations and continue to pay solid dividends to investors, making it an ideal vehicle for long-term investing and achieving financial security. Part 4. The October 2024 stock split. What it means for you. Now, for something a bit unusual but important. You might have heard that SCHD went through a 3-4-1 stock split in October 2024. This was a pretty significant event, especially rare for an ETF like SCHD. Typically, stock splits are more common with individual company stocks. So, what did this mean for you, the investor? The immediate effect was that if you owned one share of SCHD before the split, you now owned 3 shares. It's like exchanging a $20 bill for 2 $10 bills. You have more bills, but the total value is still $20. Similarly, the market price per share of SCHD became 1/3 of what it was before the split, but the total value of your investment didn't change. You were holding more shares at a lower price per share, but your overall wealth remained exactly the same. Why would SCHD undergo such a split? The primary benefit is that it makes the ETF more accessible to smaller investors. When a stock or ETF price is high, it can be harder for retail investors to buy a full share. After the split, SCHD's price per share was lower, making it more affordable for individuals to buy in. This can lead to increased demand, potentially making the ETF even more liquid and easier to trade. It's all about making this incredible investment opportunity more reachable for everyone on their journey to financial independence. Part 5. SCHD's foundational strengths, key metrics. Let's look at some key metrics that truly underscore why SCHD is such a solid option for investors serious about wealth management and passive income. First, its expense ratio is incredibly low at just 0.06%. This is a huge advantage for long-term investors. It means only a minuscule portion of your investment goes towards fees, ensuring that more of your hard-earned money stays working for you, compounding year after year. High expense ratios can quietly eat into your profits, but with SCHD, you're maximizing your returns. Next, SCHD boasts a massive asset base, with over $70 billion in assets under management, AUM. That's a staggering amount of capital being managed, which speaks volumes about the trust investors place in SCHD as a reliable, income-generating investment. The sheer size of the fund also means it's exceptionally well-diversified and less likely to be impacted by volatility from any single company or sector. This is a key reason why SCHD has consistently delivered solid returns over time, even through market ups and downs. And then there's the volume. Between 12 to 14 million shares are traded on average every single day. This indicates extremely high liquidity. What does that mean for you? It means you can easily buy and sell shares without significantly affecting the market price. High volume typically signals a healthy market for the ETF, making it an attractive option for both long-term investors and those seeking some flexibility. Part 6. The big goal: surpassing your salary with passive income. Now, for the audacious goal of this video, to show you how a $20,000 investment in SCHD can eventually surpass your full-time job income and pave your way to true financial independence. Last year, the average American salary was reported to be around $62,088 a year, or about $5,174 a month. This figure represents combined earnings across various industries and experience levels. The idea of reaching an annual salary of over $60,000 or more from passive income, say, through dividend-paying investments like SCHD, might seem like a distant dream at first. But I assure you, with the right investment strategy, it is absolutely achievable. This is about building a powerful income stream that grants you not just financial security, but ultimate financial freedom. Part 7. From $20,000 to financial freedom, the drip advantage. Let's break down how your initial $20,000 investment in SCHD could help you generate $5,174 a month, or more, in passive income. Initially, with SCHD's current dividend yield of around 3.78%, your $20,000 investment would produce about $756 a year, or roughly $63 a month in dividends. While that's a solid start, it's certainly far from our $5,174 target. So, how do we bridge that gap? The answer lies in the incredible power of dividend reinvestment, often called DRIP. Instead of cashing out your dividends, you reinvest them to automatically buy more SCHD shares. The more shares you own, the more dividends you receive, creating a virtuous cycle of wealth accumulation. This is where compounding truly begins its magic. SCHD has an impressive 3-year average dividend growth rate of over 9% annually. This means the dividend payouts themselves continue to increase, accelerating your income growth. While achieving that $5,174 a month won't happen overnight, consistent reinvestment and allowing time to work in your favor is the key. As you reinvest those dividends, they buy you more shares, and those additional shares generate even more dividends. It's a steadily growing cash flow river, fueled by the power of compounding. Let's see how this transforms your future. Part 8. The future projection, your SCHD empire. Let's project forward, using SCHD's historical dividend yield of around 3.78%, a dividend growth rate of 9.01%, 3-year average, and an annual share price appreciation of about 7.69%. Based on the original script's implied growth for calculations, as historical price appreciation can vary. If you or someone like Josh invests $20,000 in SCHD, here's how it could grow with DRIP compared to simply taking the dividends. Scenario 1. No DRIP, dividends are taken as cash. After 1 year, your portfolio grows to around $22,000. After 10 years, it reaches approximately $42,000. After 20 years, your portfolio is about $88,000. After 30 years, the total value is around $185,000. Your annual dividend income at year 30 would be roughly $16,000. Not bad, but not life-changing. Scenario 2. With DRIP, dividends are reinvested. After 1 year, your portfolio also starts at around $22,000. The initial growth is similar. But after 10 years, your investment portfolio would be worth approximately $61,000. The compounding effect is beginning to accelerate. After 20 years, your portfolio has exploded to around $212,000. And by the incredible 30-year mark, your SCHD investment portfolio would be worth a staggering $898,000. The difference between these two scenarios is absolutely striking. Without DRIP, your portfolio grows to $185,000. With DRIP, it balloons to nearly $900,000. This is the undeniable power of dividend reinvestment and letting compounding work for you. Now, let's look at that passive income. For the investment without DRIP, the annual dividend income grows slower, reaching around $16,000 by year 30. But with DRIP, the growth is incredible. While it starts modest, as the dividends are reinvested to buy more shares, the income grows exponentially. By year 30, you're looking at an impressive $70,000 in annual dividends, or about $5,833 in monthly dividend income, comfortably surpassing the average American salary target of $5,174 per month. This isn't just about numbers. It's about transforming your life, achieving true financial freedom, and building the wealth you deserve. Your call to action: take control of your financial future. You've got $20,000 saved. You could let it sit idly by, or you could put it to work, transforming it into a powerful wealth management strategy that could pay you a full-time income in passive dividends and build an investment portfolio approaching $1 million. This is how financial independence truly begins. If this video has ignited a spark within you, if it's given you clarity on your path to financial security and wealth accumulation, then I have a few simple requests. Like this video. It helps us reach more people who are ready to take control of their financial destiny. Subscribe to the channel and hit that notification bell so you don't miss out on future insights into investing, passive income, and retirement planning. And I want to hear from you. Comment below and tell me, what does financial freedom look like for you? If you don't have $20,000 saved yet, don't worry. I have other videos on this channel showing how you can start building a powerful retirement plan with much smaller amounts. Even just $90 a week in SCHD can lead to over $10,000 in monthly dividend income. Check them out next. Thank you for watching. Here's to building your financial future, one smart investment at a time.